Let's move on to another one. So this is the one that I honestly, when I saw you tweeting a lot of stuff, that was the one where I was like, I need to talk to you about this because I just don't totally understand. I haven't researched it much, but ASML, just please tell us what did they do? What is
Yeah,
this, and why is it good, and why should people be buying?
yeah, absolutely. So to kind of give you a frame of reference, this is a $300 billion market cap company. It is one of the biggest companies in the world, and it's there for a very good reason. Long story short, all the chips and like you hear about these Nvidia chips, Apple's making their own chips,
Yep.
Amazon's making their own chips. All these chips being made, these are very advanced, complex chips, and so it needs a company to come in there to be able to build the machines that end up printing these chips. To kind of give you an analogy of like for it to make a little bit more sense, this would be like if you're in the process of making a cake, this would be the blender, right? The blender is a pretty
Okay.
important
Yeah.
piece to this entire thing, right? So ASML essentially makes the blender that is able to enable the making the cake or making the chips in this case.
Yep.
And this is the only company that is able to make the leading edge machines, right? So they're
Oh
called
wow.
EUV machines,
Yep.
and uh, on like a large scale, all these machines they're under the category lithography machines. So
Yep.
ASML is the only one that makes EUV lithography machines, and those are the ones that are made to make the leading edge NVIDIA, the AI chips, and the Apple chips, all that type of stuff. Now, the other part of the business, which makes up for like most of the revenues, is DUV. DUV is like simple chips that go into, for example, like car batteries or like, sorry, not car batteries, like car components and like
Yep.
the toaster or like the fridge. All these things have chips, but they're very basic chips. The
Yep.
calculator, for example, it's not really doing too
Simple
many
chips.
complex math, right?
Yep.
So ASML's business pretty much is they make these machines that are very expensive. They cost hundreds of millions of dollars, and they're
Each.
essentially necessary
Oh.
to just global chip manufacturing.
And does no one else in the world know how to make those machines like at that level? Are they the only one?
The EUV machines, so the
Yeah,
very
the
complex
UV. Yeah,
machines,
yeah.
they are essentially impossible to make. I mean, it's
Okay.
pushing the edge of known physics, quite literally.
Wow.
So, and the idea is like they're like shooting lights at like tiny pieces of silicon that are like a fraction of like a human hair thin, right?
Mm,
And you have to do it like 50 times per second in order to
wow.
print these designs on it, right? Like it's just very incredible physics at play here, right?
Yeah. Okay, and again, I'm asking because I really don't know about this, right?
Yeah.
What can you imagine? Okay, if someone else, let's say in China, because China's pouring hundreds of millions into science and research, let's say China makes their own version of ASML, how does that impact the market? Is this the type of thing where I guess because is it like a strategic asset where like in the US they would never buy the Chinese version of those machines, or is it something like a commodity where people will just buy from whoever at the lower price?
Yeah. So there's two things going on at play there. I mean, in theory, based off how capitalism laws work, that should be how it works. Eventually, China's going to figure it out. They're going to come into the market. They're going to undercut ASML, and they're going to take market share. That's how it should work, right? There's a very slight problem to that. Number one, ASML has kind of cultivated these relationships. They have three main customers that account for, I think, about 80% of revenues.
Oh wow.
Samsung,
Yep.
Intel, and TSM, which is the
Ah,
biggest
Taiwan.
customer, the
Yep.
newest $1 trillion company.
Yep.
So TSM alone accounts for about half the revenues. And so they
Okay.
have these
Yeah.
three customers that they're selling to. And it's the problem is, even let's just say China had just as good as a system, maybe even a better system. These are big factories. It's not as simple of TSM's going to walk over to China and say, "Oh, okay, this machine, whatever, great. Let's just grab the old ASML one out of the factory and then toss it
Right.
to the side, and it
Yeah.
perfectly fits inside whatever the case is, right? Like, it's not as simple as like they're not interchangeable parts. Like you
Yep.
can't just take one out, put the other one in replacement of it, and nothing's going to get messed up, right?
Right. It's massive
Um,
commitments.
so like the factory itself is like specifically built in a way to fit the ASML machine and fit the ASML process. That's
Hmm.
one thing. Number two, ASML in particular, in I want to say 2012, this is the biggest part of ASML's moat, by the way. Like this is personally, I when I heard this, it like pushed me the extra mile to start investing in the company.
Hmm.
In 2012, EUV wasn't a thing. So the leading edge machines, they weren't a thing. Like in theory, they were a thing. They were researching it, blah, blah, blah. The machines weren't actually out yet. And so they brought all the key customers in, namely Intel, Samsung, and TSM. I'm
TSM.
going to refer to them as foundries from now on, just for
Sure.
Yeah, so they brought all the foundries together and they said, "Hey, we don't have the money to continue researching this EUV technology. We would like you guys to invest into our company." And they did. They invested about 24%
Ah,
into ASML, right?
yeah.
We'd like to
Okay.
invest into the company so your
We're aligned.
incentives are aligned with us, and we're
Mm-hmm.
going to create this technology. We know it's going to eventually benefit your business. We don't have the capital to do it, so we'd like to seek your capital. In return, you can own a part of the business, right? And know that we're going
Okay.
to eventually sell to you and that type of stuff. What's
Yeah.
interesting about that is Intel was the first to invest in ASML, and they didn't ask for the EUV technology to be exclusive to them,
Oh,
which is
why?
I don't know. They didn't negotiate it, which is just
Damn.
that's the one
They're
part that
probably
baffles
punching
me.
the air now.
Yeah, in the entire story, I
Yeah.
don't understand.
Oh,
Anyways, so
yeah.
to give you a timeline,
Ah,
they did that
yeah.
eventually with the $4 or $5 billion of capital that they got. They were able to make the EUV technology, and in the process, this is the fun part about it. In the process, you're essentially like these are some items that you can't just buy off the shelf. This isn't like a battery that you go to Home Depot to get.
Yeah, right. Yeah.
These are specifically made to fit into the machine, and there's like a
Okay.
100,000 parts that goes into each ASML machine.
Mm-hmm.
And so ASML themselves would have to create a bunch of these. With that being said, 90% of the parts that go into the ASML machine, ASML doesn't actually make themselves. They simply assemble it from a long list of suppliers, right?
Okay.
And with that long list of suppliers, over time, they're like, oh, you know what? This one company that makes, for example, the light source inside the machine, this company, like we're the entire business for this company. Why don't we just buy them? Right? Strategic acquisition.
Mm,
So
yeah.
when you want to go make a lithography machine today, you kind of can't because the company that used to make the lights for everybody else is wholly owned by ASML. It's in the best
Okay.
interest of ASML to not sell you that light.
Mm-hmm.
So again, going all the way back to your China question,
Yeah.
if they were to try
They're
to
gonna have a
kind of
hard
get
ass
into this
time to
market,
do that.
sorry,
They're gonna have a hard time to do that.
they're
Yeah.
going to have a impossible time trying to create
Mm.
the light, let alone the other 100,000 parts that goes in the lithography machine.
Interesting. Oh, so that's like the ultimate moat, basically. That's
The
crazy.
ultimate technological moat, yes.
Yeah. Oh, damn. Okay. Wow.
And just very quickly, for
Yeah.
any other listeners, if you have access to the Morningstar reports through your brokerage, I know Interactive Brokers has it, Robinhood has it. Please go ahead and read the ASML report. It's maybe 30, it's the most worthwhile 30 minutes you'll have as an investor. I could not recommend it more.
Mm-hmm. Okay, I'll definitely be checking that out. That's very interesting. Okay, let's look at recent earnings. I know there's been a lot of chatter. I think it fell a little bit. So, like there were a report that people didn't like, or yeah, what walk us through that? What happened?
Yeah, so
And you
I do
bought
want
more,
to
I
just
think,
plug.
right? You bought more
Sorry?
when that happened. You added to it.
Oh yeah.
Yeah, yeah,
So
you did. Okay. Yeah.
I've tripled my position in the past 2 weeks. So there was
Wow.
weakness prior to the earnings, which I bought a little bit, and then I bought after the earnings. It now accounts for about 8% of the portfolio. I would like to probably add more in the future, call it a couple of weeks. I do want to just shout out my most recent video that just came out. I do cover it pretty good there. So in case I miss any details, like there's a
Hmm.
good amount of information there. Long
I'll
story
put the
short,
link. I'll
sorry.
put the link in the description. Yeah.
That'd be great. Yeah, thank you. Long story short, with the earnings, it was a massive um, fear, I guess you could say, of there's a key performance indicator KPI that ASML tracks. It is called the net bookings number. So it's essentially like all the contracted ASML machines that they've sold. That is like we're expected to get revenue. It's essentially like a account receivable, but for like the next couple quarters, right?
Okay.
And there's like a specific KPI that they track of like like these the Intel or whatever is like contractually obligated to pay us for this machine. It's just on the books. It hasn't gone through whatever, right? You would imagine if you're selling a $200 million machine, the sales cycle would be pretty long. You know what I mean?
Right.
So,
Yes.
anyways, so that number missed by about 50%. It was expected to be
Okay.
five and something. It came in at like 2.5, right?
Okay.
So that was ultimately like the big scare. It's kind of funny how it came out because it came out a day early on accident. I don't know if you did
On
you catch that?
accident? I heard some chatter about it, but I didn't pay it like on accident though. What does that mean? Like someone leaked it like they shouldn't have type of thing?
No. On their own website, the earnings came out a day earlier, just completely on accident, and then it got quickly taken down. But like
Oh.
Bloomberg
Oh.
downloaded all the information, I'd assume, and like
Oh.
they
Okay.
put it in an article. Yeah.
Someone's
So
getting
anyways,
fired.
sorry.
Someone's getting fired.
Yeah, definitely. Yeah.
Okay.
Anyway, that was ultimately the big fear. And then another thing that I kind of saw. getting floated around on Twitter. Some people were saying, "Oh, look at the China revenue as a percentage of total revenue. It's starting to increase. A couple of years ago, it was 15%. Now it's 50, right, on a quarterly basis." But then if you go into the earnings call, they literally point that out. They're like, "Yeah, because we are seeing some hesitancy with our big customers, aka all the foundries, and like they're a little bit more hesitant and like they're waiting a couple quarters on the next sales cycle and that type of stuff. We are seeing a spike in China revenue because that intuitively that makes sense.
Yes.
If the China revenue is just staying as it is, but then your total revenues are declining as a percentage, that's going to increase,
Yep, that
right?
makes sense.
Totally makes sense. And then an analyst specifically asked them, saying, what do you foresee in the future? Whatever. They're like, yeah, it's about 50% right now, but we think in the next couple of years we expect it to be in the low 20s, which is where
Okay.
it's been historically. Completely makes sense, right? So
Yep, that's
that
very
argument I
reasonable.
just completely write off. I think it's a super temporary, literally just the past couple of quarters issue. I just would not even think about that. The net
But
bookings
also,
number
whoa,
is
whoa,
a
wait,
real.
sorry, just want to stop you right there. But even if it was 50% from China, like, what is the issue with that? Is it just again, it's like, oh, communist country type of thing? Is that what they're worried about,
Okay,
or
yeah,
what's the
sorry, I should
problem?
explain that.
Yeah,
Yeah, so
because money is
the
money, regardless of where it comes from.
yeah,
But yeah.
historically the China issue has been, even though it's a Dutch company, maybe I should have mentioned that up front.
Hmm.
It's this
Yeah,
company's headquartered in the Netherlands, although it is listed in on the Nasdaq in the US, right? Historically, the issue with a lot of China revenue, particularly in the semis industry, and even Nvidia saw this, I think, in 2022. There has been, and there could be future regulations passed, essentially saying that we don't want you to sell this technology to China because we don't want to make that geography more powerful than the US,
okay.
right?
So geopolitics. Okay, yeah.
Geopolitics. Now, the issue with that is, sure, the leading edge EUV machines and all that type of stuff, they've been banned from being sold to China for like a long time. But then the current machines that are being sent to China, and I believe this is SK Hynix, the main company that buys it in China, the machines that are being sent to essentially SK Hynix, those are all like very basic DUV machines that are like even
Got it.
Nikon and Canon can make them.
Oh,
It's used
okay.
to like make calculators and all that
Yep.
type of stuff. So even if let's just say that part of the business made 50% of revenues, it's not prone to any type of regulation. These are
Mm.
very basic machines.
So it's just analysts being scared, like again, people just yeah, getting a
Yeah,
little
I completely write off the China
overexcited.
risk argument.
Yeah, okay, I see. Ah,
Yeah.
interesting. Okay, and sorry, so I cut you off, and then you were gonna talk about the bookings.
Yeah, so then the net bookings is a real maybe like negative catalyst for the next, call it, couple quarters to up to a year. It was, and you could see this on the revenue chart of ASML. It's very cyclical, by the way. So you would see that like for give or take 4 years, the revenues are like somewhat flat, slightly up, slightly down, and then within a year, the revenues double. Why is that? There's a new wave of technology roughly every 4 years, and all these key customers of ASML, they all kind of put their orders in roughly within the same year. And like there's like a big pipeline, even internally at the company. I've spoke to some employees like, yeah, like we're looking at 2025. We're looking towards 2025, right? So for the longest time, internally within the company, on all the conference call materials, that type of stuff, they're just focused in on this one key year where they're gonna mass make all these different EUV machines.
Hmm.
Essentially, what they said in the most recent earnings call, they talked about how this customer cautiousness is kind of pushing back their timeline of when they expect to be selling all these EUV machines. And so if we expected it to be 2025, maybe now we expect that big boost in revenue, the 50% gain, like literally overnight. Maybe we expect that a little bit later into the year 2025. Maybe we expect it earlier in 2026. That's what I got out of the net bookings number being down.
Okay, so it's just a deferral, but it's not like a permanent impairment of the company's abilities to make
No,
any revenues or profits then.
no,
Yeah.
it's just a delaying in when the next wave of revenue is coming.
Yeah. And I guess within that delay, the moat is still the same. Like it's not going to change anytime soon. So it's perhaps an opportunity then because it fell like what, 17% or something in a day? Was
It
that
fell 22% in 2 days.
Oh man, yeah. Okay. Huh, interesting. Maybe I should look into that too. I have a little bit of exposure via a world ETF. I wanted a world ETF because I get access to all the best European businesses and best Asian businesses too. But cool. Okay. What else would you have to say about ASML, if anything, that listeners should be aware of?
Yeah, we'll touch on valuation here, and historically, me personally, I've put the utmost importance on free cash flows. Now, I've done a pretty detailed video talking about how free cash flows are actually very misleading depending on where the
Hmm.
business is in the capex cycle. Free
Yeah.
cash flows essentially rewards the capital light business that is extremely mature and doesn't have a lot of variability in their cost.
Yep.
I'm describing to you MasterCard's business model, right?
Hmm.
Other than MasterCard, like in general, free cash flows isn't the best immediate measure of value. And there could be a lot of variables and a lot of swings in how the free cash flows are depending on the capex cycle, all that type of stuff.
Yep.
In ASML in particular, which is a somewhat capital heavy business, not really, again, because they bring 90% of the parts that go into the lithography machines, they bring that they're essentially like an assembly company.
Hmm.
You could kind of think of it as like Boeing. Like Boeing doesn't really manufacture anything for themselves. They kind of
Yep.
just assemble all the parts and sell it.
Yep. Yep.
ASML operates in a similar manner. And so free cash flows historically, depending on the how the inventories look and all that type of stuff, where in the cycle they are, free cash flow hasn't been that good or like that great of a method to look at it. And then in terms of PE and that type of stuff, that's how I like to evaluate. That also is comes with a big grain of salt because if you're looking at like trailing PE when the earnings and the revenues are depressed, it might look excessively expensive, right?
Right.
You're looking at
Right.
like, oh, 50 times earnings. Are you? Why
Hmm.
would we invest in this? They're way too expensive. I don't care what the mode is, what the earnings are, whatever. But then if you look on a forward basis, you're like, oh, how is it going from a 50 trailing PE to a 23 forward PE? That's the whole
Hmm.
discrepancy I'm talking to you
Yeah.
about the cyclicality of it. So it's
Yeah. Yeah.
a very difficult to value business. Nonetheless, the forward PE of the company, it sits around like a mid 20s PE, which for like around 20% long-term earnings growth rate plus the moat plus it has very good margins. Like
Yeah.
it's
It's
like a
quite
50 something.
reasonable.
Sorry?
It's reasonable valuation at
I
that
think
point.
it's a very reasonable valuation. Yeah.
Yeah. Okay. Thank you for that. Very awesome to hear about ASML. Great business. Let's move on to Salesforce
Oh boy.
CRM. That's like one of your favorites, right?